All right, let's get right into it because a massive story is unfolding that the mainstream media is frankly completely missing. And if you look at the patterns, we could be on the verge of a historic asset melt-up starting in 2026. So let me just ask you this. Are you one of the people waiting for the Federal Reserve to hold a big press conference? Waiting for that breaking news alert to flash across your phone saying, we're printing money again. If that's you, I've got some news for you. You've already missed it. The starting gun has already been fired. That's right. You need to remember this date, December 1st, 2025. That's the day that nobody noticed when the Fed quietly flipped the switch. Now, the official story was that they were just ending quantitative tightening, that boring process of shrinking the money supply. But what was happening behind the curtain was way, way more important. On that exact same day, they quietly pushed $13.5 billion into the banking system. And just look at this number. This is the second biggest injection of its kind since the crazy days of 2020. So the money printer isn't just getting turned back on, it's already running. So in this briefing, here's what we're going to break down. We're going to cover that silent pivot, explain something called the island effect, lay out a clear strategy for this 2026 melt-up, put a spotlight on a tech solution that fits this theme, and then the final takeaway.
So let's start right there with the silent pivot and the one piece of data that almost everyone seems to be ignoring.
And this chart, wow, it really just lays it all out, doesn't it? You see the huge spike back in the 2020 crisis. Then things go quiet while the Fed is tightening. And then, bam, look at that spike on December 1st, 2025. This is not a blip on the radar, folks. This is a complete policy shift. For the last few years, the Fed was a headwind, right? Sucking liquidity out of the market. Well, that era is over. So you might be asking, why? Why would stock prices just disconnect from the real economy? To get that, you have to understand something I call the island effect. It's the key to understanding how all this new money really works. Just picture this, a small island economy. There's a set number of things to own, a few houses, a few boats, that's about it. Now imagine a central banker flies over in a helicopter and just drops a briefcase with $500,000 onto the beach. But here's the crucial part. It doesn't get distributed evenly. It lands right at the feet of the island's bankers and government officials. What do? They immediately start buying up all the houses and boats. So by the time that money finally trickles down to the regular folks on the island, the price of everything has already doubled. And that right there is exactly what's happening in our economy. The Fed injects the liquidity, it hits the financial system first, and the people closest to the money start bidding up the prices of stocks and real estate. It's not about fundamentals anymore. It's a game of liquidity. Okay, so if we accept that this is the new game we're playing, how do you navigate it? Let's talk strategy. Let's build a playbook for this 2026 melt-up. And look, this isn't just my theory. The Fed is practically telling us their game plan out loud. You've got Dallas Fed President Lori Logan on the record saying this, and the translation is simple. They are terrified of the credit markets freezing up, and when the Fed gets scared, they print. This is the perfect recipe for what's known as a melt-up. And it's really important to know what this term means. It's a sharp rise in asset prices that isn't driven by companies suddenly becoming more profitable. No. It's driven by a flood of money chasing a limited supply of assets. Basically, cash becomes trash, and hard assets get bid up to the moon. So the big question is, how do you position yourself for this without getting totally wrecked? It boils down to 3 simple rules. Rule number 1, follow the liquidity, not the headlines. The real story is being written on the Fed's balance sheet, not in the day-to-day news churn. Rule 2, don't fight the trend, but, and this is critical, do not leverage the trend. These melt-ups are wild rides with brutal pullbacks. If you're using margin, you can get wiped out just before the next big move up. And rule 3, diversify across the things that are likely to win. We're talking commodities, hard assets, and disruptive growth tech that can actually outrun inflation. So if we're looking for that sweet spot of hard assets and tech growth, where do we even begin? Well, I want to shine a spotlight on one company that sits right at that intersection, tackling a huge real-world problem with some really innovative technology. The problem is plastic waste, and the company is Aduro Clean Technologies. I mean, we all know the stats, but they're just mind-boggling. We produce 400 million tons of plastic every single year, and less than 10% of that actually gets recycled. And the reason is pretty simple. The old way of recycling is just terrible. It's expensive and it's incredibly inefficient. So most recycling today uses this process called pyrolysis. It's a brute force method. You're basically just burning plastic at insane temperatures. It's dirty, it uses a ton of energy, and it creates a bunch of useless waste. Aduro is doing something completely different. They have a patented technology, it's a mouthful, called hydrochemolytic technology, or HCT. But all that means is they use chemically supercharged water at much lower temperatures to break plastic down at the molecular level. It's elegant, not brute force.
And the results from their trials? I mean, the numbers speak for themselves. Traditional methods might get you a 70% yield of usable product. Aduro's trials have been reporting yields as high as 95% with way less waste. They're taking worthless, contaminated plastic and turning it back into a valuable chemical feedstock. And here's the kicker. This isn't just a cool technology looking for a problem. There is a massive regulatory tailwind pushing it forward. The European Union has mandated that 55% of all packaging has to be made from recycled materials by 2030. That creates guaranteed demand for a solution that actually works.
All right, let's bring it all home. Let's get to the final takeaway because at the end of the day, this is all about reading the tea leaves from the Federal Reserve. The pivot has already happened. I'm going to say that one more time because it's that important. The pivot is complete. The Fed has shifted its stance from tightening the economy to supporting the economy. The liquidity taps are open.
And this leads us to the single most important point of this entire briefing. In this kind of environment, the absolute worst thing you can possibly do is sit on a pile of cash while its purchasing power is being systematically destroyed. Okay, and as always, I have to be absolutely crystal clear. Everything I've said about Aduro is for educational purposes. This is a pre-revenue, small-cap company which comes with its own risks. This is not financial advice. You have to do your own homework. I'm just a guy pointing at the data.
But the data is suggesting that 2026 and 2027 are being set up for a liquidity bonanza. The writing is on the wall. So the question I'll leave you with is a simple one. Are you positioned for what's coming next?